When I saw my daughter's almost complete mosaic, I had the same urge many investors have in markets. I wanted to finish it. That impulse sounds harmless, even affectionate. But it reveals a deeper problem: we are drawn to the outcome, while underestimating the work required to earn it. Investing is deceptive for exactly that reason. Money is the visible prize, but the real work is boring, uncertain, repetitive, and full of failure. A mosaic is not impressive when you first unbox it. An investing process is not attractive when you first begin either. What matters is whether you can stay with it long enough to complete it. Most people say they want profits. What they often mean is they want the ending without the grind. They want the gain, not the process. They want the market to reward them quickly, and they want the reward to confirm that they are smart. But real performance usually comes from doing unglamorous things well, repeatedly, under uncertainty. That is why research, patience, discipline, and restraint are so difficult. They do not feel rewarding in the moment. But that early discomfort is not a bug. It is often the price of a durable edge. If a process feels easy from day one, that is probably a warning sign. The mosaic also teaches something important about belief. My daughter kept working because she believed she could finish it. But that belief was not just hope. It was built through action. She had seen enough progress to trust the final outcome. Investing works the same way. You do not build conviction by reading slogans or borrowing someone else's confidence. You build it by doing the work yourself. You test your process. You watch where you make mistakes. You adjust. You repeat. Over time, belief becomes grounded in experience. That matters because certainty is not available in markets. What is available is a framework, a method, and evidence. Before asking whether an idea will make money, ask whether your process can survive uncertainty. The better question is not, can I be right immediately? The better question is, can I continue operating well when I am not right immediately? A practical approach is simple. Define the process clearly before you enter a trade or investment. Separate signal from noise so short-term outcomes do not dominate judgment. Size positions so mistakes remain survivable. Review decisions honestly. Build belief through repetition, not hope. The danger comes when you want the money too badly. As the picture gets closer to completion, the temptation is to take over, rush, interfere, and claim credit. Markets do the same thing to us. Ego often shows up right when patience is needed most. When the desire for money becomes the main focus, judgment gets distorted. It can lead to overtrading, leverage, poor timing, or abandoning a sound process because the result is not arriving fast enough. The desire for money is not the problem. Making it the only thing that matters is the problem. The better aim is to become trustworthy in your own eyes. If you have tested your approach, survived mistakes, and seen your process hold up over time, you begin to trust yourself. That trust is more durable than optimism, and more useful than borrowed confidence. The finished mosaic is beautiful. Of course people want that. But the beauty only exists because someone accepted the frustration of the unfinished version. The same is true in investing. The visible reward comes after the invisible effort. So the real question is not whether you want the outcome. Almost everyone does. The real question is whether you are willing to endure the unglamorous middle long enough to earn it. In markets, as in a mosaic, the final picture is only possible because someone stayed with the pieces.